What's good, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades. In today's video, we're going to be talking about two innovative, disruptive stocks that are about to go public via reverse mergers with a couple of SPACs. One of the stocks is the biggest EV fast charging company out there right now. I think it has a lot of potential. You guys know how big I am on these EV charging companies. I think 20, 30 years from now, you go to the gas station, there's not going to be that many gas pumps, but there's going to be a ton of fast EV chargers with credit card readers on them. And we know how much money swiping that credit card can bring. We get reoccurring revenue. It's almost like a software as a service business model. I'm absolutely in love with it. The second stock we're going to be breaking down is a new space SPAC. It doesn't get more innovative or disruptive than space stocks, a rocket stock, literally rocket science. So in today's video, we're going to be breaking down the fundamentals of these companies, the business models, my personal investing plan in these stocks, and I'll slap some price targets on them towards the end of the video. If you're new to the channel, hit that subscribe button, and everybody go down there and like the button. And if you like yourself some free money, I know I like free money, check out the link in the description for Webull. Webull is partnered up with the Touchdown Trades community. Free money, check it out. All right, guys, let's break down these two growth stocks that are going public via SPACs. Let's get it. Check out the link in the description for the free trial to the private Discord chat where you get my buy and sell orders in real time. I sent out an alert for AT&F yesterday we bought it at $3.50 right before the market opened, and today it hit highs of $5. That's a 40% gain in just less than 2 days. We've been straight crushing it in the private Discord chat. Free trial link in the description. The first stock we're going to be breaking down in today's video is ticker symbol CLII, Climate Change Crisis Real Impact. It's a crazy name, but they're merging with EVgo, which is an EV fast charging company that builds and manages these fast charging systems. I'm absolutely in love with EV charging as a business model. I think it's going to provide these companies with reoccurring revenue, and I think it's going to be huge. Think about the potential. The potential is literally endless. Think about once we make a transition from internal combustion vehicles to EV vehicles, we're going to need EV charging stations literally everywhere. And I think it's potential to have a bunch of big billion-dollar companies come out of this. So after the merger, the ticker symbol will change and it will trade under ticker symbol EVGO. The deal is expected to give EVgo a injection of $575 million in proceeds to help build a foundation for the company to grow off of. Furthermore, we're going to have an expected valuation of $2.6 billion. That's going to be the market cap post-merger. So we're here on the EVgo website, and their motto is charge in minutes, not hours. And I think that's really important. The future of the EV auto industry is more dependent, in my opinion, on these EV charging companies being able to cut down the charging time from 30, 45 minutes, whatever it takes now, to like 5 minutes. That's going to need to happen in order to get your common consumers to shift from gas vehicles to EV vehicles. And EVgo is working on just that, getting the charging time down to just minutes. Their chargers are DC fast chargers. DC fast charging empowers you to charge your battery vehicle quickly, conveniently, and on the go. Why charge in hours when you can charge to near full capacity in under 30 minutes? So here we have level 1 charging. It's going to give you only 2 miles of range in 30 minutes. Level 2 charging, it's going to give you 10 miles of range in 30 minutes. And here we have EVgo's DC fast charging. It's going to give you up to 120 miles of range in 20 to 30 minutes. So the numbers speak for themselves. EVgo owns the largest U.S. public DC fast charging network. So we're getting in, if we invest in this company, we're getting in the biggest fast charging network out there in the United States right now. They have partnerships with GM, BMW, Nissan, Avis, and budget rental car companies, Lyft, and Uber. That's going to be big because I see Uber and Lyft transitioning to robo-taxis eventually in the next decade or so. Those robo-taxis are going to be guaranteed EV. So if EVgo can partner up with Uber and Lyft, that's already a huge customer base. Currently, they have 1,400 current DC fast chargers in their network. They're going to be adding 2,700 plus more DC fast chargers with a deal they've struck with GM. They have a contract with GM. So they're 100% renewable energy powered and 48% margin year to date 2020. That is an absolutely huge margin, 48%. That is a big margin. Here we have a timeline, and there's some pretty interesting stats on this timeline. Two that I took are first, multi-city partner with Lyft. First to partner with Uber, huge. They're the first charging network with integrated Tesla connectors. That is big, as Tesla is the leader in the EV space right now. Look at their projected growth of EV, and we can see how this is just a rising tide lifts all boats, and EV charging is going to be in high demand for the foreseeable future. We're here right now, 2020, and by 2040, look at that growth. It's just straight to the moon. So 2040, we're going to have 76 million EV vehicles out there that are going to need fast chargers. Here on the left, we have a chart ranking EVgo versus their competitors in customer satisfaction. So EVgo gets 8.5 average stars from their customers, ChargePoint 7.6, and Blink Charging only 7 stars from their customers. And I love all three of these companies. I love EVgo, I love ChargePoint, and I love Blink. But apparently, according to EVgo, they are getting better ratings from their customers versus their competitors. Let's get down to the brass tacks and look at expected revenue growth. This is what I like to look at when I'm investing or looking at investing in growth companies, growth stocks. So in 2020, we're going to have revenue basically nothing of $14 million, but we see this growth increasing exponentially. By 2024, revenue expected of $326 million. By 2027, $1.2 billion in revenue expected. So that growth is pretty exponential. All right, so let's talk about what I want to do. Do I want to invest in this stock right now? Am I waiting? What's the deal? So we're expected to go to market with a market cap of $2.1 billion. We're expected not to have revenue, really any revenue, until like 2025, and then 1.2 billion, I believe it was, in 2027. So what I'm going to do is I'm just going to stock this and wait for a pullback. I am not invested in it right now. I would love to be invested in all three of the main EV charging stocks, as I think it's a massive sector and it's going to be an emerging market for the next couple of decades. So I'm going to wait for a pullback, and I would love to invest in this down towards $18, $17 a share. But right now, I'm just watching. All right, let's move on to the second stock that's going public via SPAC. This is a space stock. The SPAC is ticker symbol HOLUU. This is Holicity Inc. This is going to be taking Astra, a launch rocket space stock, public. I think space is going to be a huge trillion with a T dollar industry in the next couple of decades. So the rocket builder Astra is merging with special acquisition company Holicity to go public in a deal that values the rocket company at $2.4 billion enterprise value. Astra will list on the NASDAQ under ticker symbol ASTR when the deal closes. The rocket startup in December became the largest private company to reach space after its Rocket 3.2 vehicle launched from Kodiak, Alaska. This is the first pure-play public space company. Competitive advantage that increases with velocity and scale, large growing sales backlog, and pipeline. Space is the next economic frontier. We're here on the Astra investor presentation, and I completely agree with that. I think space is going to be a huge trillion-dollar industry, and they think space is going to be a trillion-dollar industry by 2040. $216 billion satellite manufacturing spending through 2030. This is a huge sector. $40 billion in just government spending alone, and 400 private U.S. companies. Astra is the third privately funded U.S. company in history to reach space and demonstrate orbital capacity. So basically what Astra does is you got a satellite, you want to get it to space, you got to hire somebody to get it there. It's definitely not free to get your satellite to space, so they hire a company like Astra to launch that satellite to space, take it to where you want to go, leave it there, and then come back. And that's a pretty expensive thing to do. It's a pretty expensive product to get a satellite to space. We have 38,000+ satellites to be built and launched from 2020 to 2029 alone. 100 billion in launch market revenue over the next decade, and Astra is going to be a huge player in that sector. So from 2021 to 2029, we're going to have a huge increase in the amount of satellites going to space. It only took Astra 4 years to get to space, which was 3 years faster than SpaceX. It was 8 years faster than Rocket Lab and 9 years faster than Virgin Orbit. They have 10+ customers and 50 launches in backlog. So they have expected revenue on backlog, which is always a good thing. Over 150 million in contracted revenue, over 100 spacecraft in backlog. All customers are highly reputable, well-funded, and currently in orbital operation. So here we have the brass tacks. Let's get down to the numbers. In 2021, we're going to have barely any revenue, but by 2025, we're all the way up to $1.25 billion in revenue. And if we remember the growth of the number of satellites going to space, it was exponential. So by 2030, I expect this company to be at $3, maybe $4 billion in annual revenue. I am very interested in investing in this stock, probably even more so than EVgo, the first stock we talked about. I want to buy this SPAC. I want to be invested in Astra, and I want to have as much space exposure as possible. I think it's going to be the next big sector in the stock market. I think space is going to be huge. I think it's going to be $1 trillion industry by 2035, 2040. And I think Astra has the potential to be a $10 billion company by that time. And remember, they're only going to market with a market cap of $2 billion. So I'm putting a price target. We'll put a 5-year price target of at least $40 a share on this Astra stock. And I want to be invested in this thing. If we get any kind of pullback down towards $14 a share, I will be long in this company. All right, guys, that's going to wrap up the video. Hope you got something from it. If you did, hit that like button for me. If you're not yet subscribed, what are you waiting on? All right, guys, I'll catch you on the next one. Love all of you. Until next time, peace.